back to Newsroom. Well, moving on to a report released by Grant Thornton. They have released their second global private equity report for the year. The report states that private equity firms are going global, even as the face of slowing growth exists. Well, joining us now to analyze this is Harish HV. He is the partner corporate finance at Grant Thornton. Harish, thanks a lot for joining us. Well, you've been speaking to around 143 private equity investors across the globe. What really are the trends you're picking up as far as the Indian market is concerned and as far as private equity investment is into India?
Yeah, I think this was a survey which covered 143 respondents across the world to look at various aspects of which private equity operates in, be it fundraising for private equity, be it investments, be it exits, be it portfolio management. And as far as India is concerned, I just heard your quote from Narayan Murthy, and that is borne out by the survey. We had asked last year how many people would like to decrease their investment in India out of the survey, and the answer was 0%. This year, 45% of the respondents said they would decrease their investment into India. Fortunately, in some sense, China is also in the same boat. But I think the clear message is India is no longer the toast of the world. We are hearing new names in South America. For example, in the survey, we heard a lot of people talking about Burma. And in India, again, people say there's a clear flight to quality. Good private equity funds which have the track record are quite easy for them to raise money. But for most others, it's going to be a big challenge. Again, LPs are putting a lot of pressure on fees. There are concerns in India about corporate governance, about potential frauds that are happening in Indian companies. So these are some of the concerns that investors have had. And obviously the biggest issue, which is lack of an IPO market and lack of good exits. So those are the headlines of the survey.
Right, Harish, it's interesting you mentioned the lack of corporate governance in India, but you've highlighted that as one of the biggest risks as far as the entire of emerging markets are concerned. What really are the major hurdles across emerging markets?
The major hurdles, like I said, is corporate governance, one, which is not enough standards of keeping the board updated, operating through a board structure. It's predominantly individual driven, decisions made in individual interest rather than the corporate interest. So those are the issues on corporate governance. Other issues in emerging markets would be a good M&A market or a lack of it, which would help private equity exit from companies they've invested in the absence of an IPO market. The absence of IPO market is not purely an Indian phenomenon, but a global phenomenon. But in other parts of the world, they're able to exit through strategic buyers. But in India, that market needs to develop much more deeply.
Right. Let's talk about fundraising. Now, you've said that 72% of private equity guys have described the fundraising outlook as either negative or very negative, and this compares to just around 46% in the last year. Is there a lack for a need for funds or just plain risk aversion?
Well, I think at a macro level, there are different reasons why private equity is facing challenges in fundraising. The first and foremost, on a global basis, is a little bit of negativity about private equity, particularly led by the US post the elections, where a lot of press got about Bain Capital. But the larger question really is private equity delivering? There are questions about, its ability to return money to investors. And hence, LPs, who are the primary investors in private equity, are being extremely tough. At the same time, I'd like to give the example of a fund called Advent, which has got a phenomenal track record, and they did a round of fundraising recently, and they got 3 times what they asked for and returned the excess capital. So clearly there is money available, but people are being extremely cautious. And what we are hearing is the level of diligence on the private equity fund is as rigorous, if not more than the ones which private equity funds do on companies, because they need to reassure themselves that the team will be intact for a period of 10 to 15 years of the life of the fund. The team has its values, its integrity, as well as its cohesion intact and will remain so for the period. So there are a number of factors they look at, and therefore fundraising has become extremely challenging for most PE funds. Obviously, in any market, the stars will always get away with a lot of success, and that's what is happening now.
Right. Harish, you also mentioned about the exit route. Well, how many really private equities are looking for an exit route for want of it, and which are really the parties that are interested in picking up this stake?
Well, I think any fund has a life cycle of 5 to 7 years when they need to return money to LPs. Some will have slightly longer, some may have slightly shorter. So if you look at the Indian scenario, for example, a lot of funds are in that 5-year time frame, and most of them built their case on an IPO exit. Today we don't have an IPO exit, so we are looking at strategic exits where trade buyers or other PE funds come in and buy. And that is where the market needs to develop. We believe that market is developing in India, but it's still in the early days. And globally, that is a very strong market where there's a lot of transactions which happen between strategics and private equity players, and between one and another private equity player. So that is the broad theme of exits. And clearly, if you're running a private equity fund, you need to provide exits, return capital to LPs, and then go back for more.
Right. Thanks a lot, Harish, for joining us, sharing your perspective on